Good morning, everyone, and welcome to today's morning report on Thursday, the 22nd of January, with me, Rich Perry, market analyst at Handtech Markets. It is ECB day, and finally, after months and arguably even years of waiting, it looks like this is finally going to be the day at which we're going to get some QE out of the ECB. Now, exactly how this QE takes form and shape is the crux of the matter, really, and how big the programme is. It's already been leaked to the media that it's going to be a €50 billion programme of purchases every month for at least a year, maybe even up to the end of 2016. So that would suggest between sort of 600 and just over a trillion euros, 600 billion to a trillion euros of purchases. Now, is this enough to placate the market? Also, what is the how are they going to do the composition of the purchases? Are they going to go on a country basis, or are they going to do corporate bonds? It's still up in the air. So it'll be interesting to see what Draghi comes out with today in his press conference. Don't expect too much around the 12:45 rates decision. The details will certainly be coming out in the press conference at 1:30, and that is, I think, at the point at which we're going to be getting all the movement today. Now, the markets in front of this have settled down a little bit this morning, although you would argue the Wall Street was still fairly volatile yesterday, flying up between higher and lower, closing positively on the session. On the S&P 500, it was up 0.5%. The VIX index, interestingly, continues to dip, continues to fall back, and that would again suggest that a certain calming is beginning to come over these markets. Asian markets overnight were fairly flat to slightly positive. European markets at the moment again fluctuating between positive and sort of flat, really. So slightly higher on the FTSE, very slightly higher on the DAX. It seems like investors and traders are unwilling to really take too much of a position ahead of this crucial announcement today. Now, in terms of forex markets, we've got pretty much flat on the euro. It had been lower, although it's just jumped back towards flat. Sterling is very slightly higher. The Japanese yen, interestingly, has come back slightly. In terms of dollar yen, has just dropped back below 118 again, but I'll talk about all these things in a minute. Now, dollar index, again, so it's just really consolidating a little bit. It's had this mini sort of breakout of a consolidation. It's sort of now consolidating higher again. So I think that's what we're going to get. But I think this afternoon is going to be extremely volatile. It's very difficult to say exactly which way it's going to go. It could be potentially, I suppose, it could have the potential on the euro, for example, of a sell on rumour, buy on fact. But it's difficult to say at this stage without knowing, obviously, the detail behind Mario Draghi's programme. Now, so today, for the rest of the day, early doors, we've got UK public sector borrowing just expected to just improve slightly to 9.2, which is a negative number, so that it's coming back towards flat, which is coming increasingly positive. But to be honest, the market is probably going to just completely look past that in front of this ECB data. Also, we've got at the exact point at which Draghi will be having his press conference, you've got the weekly jobless claims for the States at 1:30, and that's expected to be 300,000. So, watch out for the ECB, I think, today. Now, on my chart of the day, we've had a very interesting move in the commodity currencies, and the Kiwi dollar is one of them. Now, that's come on after the Bank of Canada had a surprise rate cut yesterday afternoon, and then the commodity currencies fell away sharply on the back of that. Now, we've seen the Kiwi dollar drop below the key floor that it had been formed through December, and that sort of completes a sort of breakdown from a trading pattern, which arguably a consolidation pattern, which arguably now opens further declines back towards perhaps even back towards 72 figure. So if you'd probably be looking for a 2-day close. It looks likely at the moment that we're going to get a 2-day close, but obviously today it could be a volatile reaction this afternoon. We might get dollar weakness, even if there is a relief rally on the euro, so that could pull Kiwi dollar higher. So it'd be interesting to see what happens, but at the moment certainly this breakdown looks like a serious move. The momentum indicators have sort of regained their negative configuration again. MACD lines, stochastics and RSI all dropping, and it just looks like rallies now should be seen as a chance to sell on this. This is that 76.06 old key floor. If you zoom in slightly, you'd see a slight amount of trading band resistance, old trading band resistance, an old floor around that 76.20 mark from yesterday. And I think that between 76 figure and 76.20 is sort of a decent first line of resistance for you to really look out for. But it certainly looks like this has been a key breakdown. All these moving averages beginning to turn down again in bearish sequence. Momentum indicators looking negative. So I think it would suggest selling into strength is the way to play this. If you do get a volatile jump on the Kiwi, the chances are that I think it would probably be a near-term thing, and you'd be able to use that as a chance to sell. Anyway, I wish you good luck in your trading on the Kiwi today, and obviously on any FX related plays, and I will speak to you again later. Thank you.